Bitcoin and stock markets were rejected at their critical resistance levels overnight on the back of the Fed announcement. We'll take a look at that Fed announcement, what that means to the markets, crypto and stock markets in the short term and long term, as we're looking at 2022 shaping up to be one of the best times to get into the market if we missed out on the low prices of 2020 and early 2021. So make sure you've tapped that like button, subscribe to the channel if you haven't already, and follow the financial journey here on the channel. Bell notification icon so you can see these videos pop up on your newsfeed. Let's dive in. This is the Fed announcement here. The main things that we're looking at here is the rate hike coming in March and stopping the stimulus at the beginning of March. They're the main 2 points here. And from what we've seen, it looks like the market has priced this in over the last few days and weeks as we have plummeted to new low prices. Now, in terms of these short-term rejections, which we'll have a look at on the chart in just a sec, it does look like we are holding up for the time being. But in terms of what the Fed has talked about, they are saying here on their statement, job gains have been solid in recent months and the unemployment rate has declined substantially. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. Now, we're expecting the jobs to decline, or the unemployment to decline over this next half of the real estate, the 18-year real estate cycle, which is leading us into a peak around 2026 to 2027. We'll know closer towards the date, but we still see many years ahead of strong growth. And unemployment is going to get more difficult for that labor market, which is then going to increase wages. And this is what everyone has been waiting for. Now, I'm not saying that that is going to help pay for real estate and help people get into the real estate market. The only thing I'm looking at here is I believe wages will eventually rise as these jobs are just not getting filled. Now, going back to this document here, the committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. The committee decided to keep the target range of the federal funds rate at 0 to 0.25%. So this isn't anything that the market wasn't expecting, which is probably why we didn't see too much volatility within the markets overnight. Following on, with inflation well above 2% and a strong labor market, this is again my opinion, I know people may differ and they believe that things are going to get a lot worse. That's not my view, and that's why I'm investing at this point. Moving on, the committee expects it will soon be appropriate to raise the target range for the federal funds rate. The committee decided to continue to reduce the monthly pace of its net asset purchases, bringing them to an end in early March. Beginning in February, the committee will increase its holdings of Treasury securities by at least $20 billion and of agency mortgage-backed securities of at least $10 billion. So they're going to be purchasing another $30 billion in February. Last point here, the committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. So the committee has goals. If something happens in the economy, they'll change what they are saying in this document. They're basically just giving themselves a get out of jail card free. Now onto the charts and that short-term rejection. So this is our 50% level short-term timeframes. Remember, short-term timeframes will always bring short-term reactions. Whatever happens to the market is going to be short-term. So if we're only looking at shorter terms, it's going to be a shorter move. If we look at longer-term moves, longer-term rejections, or markets coming back to support, we're going to get bigger moves. So this is only short-term. Short-term rejection, bang on, 50%. We're using our 1 hour chart here. You can see this is the down range. The market held up on the 20th and then fell away from the 21st, coming into that low on the 25th. And it could not close the 1 hour chart above the 50% level. So short-term rejection. The good news is at least the low is higher than it was on the 25th. So for the NASDAQ, for the short term, doesn't look too bad. Moving to a macro chart, the NASDAQ is still down about 15.5% from its all-time high. The total drop here was 18%. So in terms of history, it's nothing out of the ordinary. It did happen rather quick, which means we're probably in for a little bit more volatility until the market just starts to cool off and it becomes boring, sideways, the accumulation takes place. Don't know if that's going to happen today, but it looks like that's what will have to happen in order for the market to assert itself, get its bottom in and start moving. So 18% still within a pretty good range here. And of course, we still have a lot more support further down. Same goes for the S&P 500. It did get rejected at the 50%, but it didn't close any lower than the previous low on the 25th, which is good news. Volumes coming in, but of course, that's the end of day volume and the opening volume as well. You always have the opening and the end of day gets more volume in the market. So this isn't looking too bad. Nothing much has really changed for these. However, they were rejected short term when that news announcement was made. I think just while the market digests what was in the report. For the Aussies, same sort of thing. Our market has opened and it's closed down now, meaning it broke the low of the 25th as I record this video. We weren't open on the 26th for our Australia Day public holiday, but in terms of the short-term 1 hour range, it also was rejected at its 50% level. So the Australian market is looking much weaker than the US markets, and this yellow line is our all-time high of 2007 before we had a major crash. So we're getting closer to that high, whereas the US is well and truly beyond those price levels. So keep an eye on that. If we start to close below these levels, Aussie market's going to be in a little more trouble than the US markets. However, we still have plenty of support down below. Can drag this back to these previous lows around 6,700 and then the major 50% here. What do we got for Bitcoin and crypto? Well, the dominance chart is leaning towards Bitcoin. We are seeing a little more dominance come back into Bitcoin, not as quick as I would have expected during a downtrend of the market. Bitcoin's gone from around 39% to about 42%. So it's taken 3% of the market share back. I don't suspect it's going to ever climb to any great heights moving forward. Obviously, there are more cryptos coming into the market. And long term, I think Ethereum is going to continue to eat away at the dominance of Bitcoin. You can see we have a triple bottom here. If this doesn't play out too quickly, meaning Bitcoin's dominance to gain in the shorter term, break the 50% at 43, get above 47 or 48%, then this is probably going to fade out or at least wane between these levels of 39 and 47%, which means maybe we'll see some odd altcoin pumps even during this downtrend of Bitcoin and crypto. So the overall market, Bitcoin is slowly climbing. At the moment, it's slowly dropping. And you can see this green one here. This is Tether. So the money is flowing back into the stables. The fear and greed has dropped just a little from yesterday. We're at 20. Yesterday was 23. So really no action on our purchasing of Bitcoin based on the fear and greed index. Make sure you're following the channel, subscribe, bell notification icon as we go through that plan. And of course, plenty of other altcoins and cryptos. So for Bitcoin, we were also rejected at the 50% level. This is the short-term 50%. You can see a little peak here where the market just tried to creep above, got to 43.5 and then dumped from that point. This is the 50% at 38,300. Yesterday, we were looking specifically at 38,300 for the market to break and close above. It hit that exact price, 38,900. You can see these levels here of 38,200, but there were no closes above that. So we hit 38.3, no closes. We need those closes. Now the volume on the 1 hour, the short-term time frame, came in on that peak. So I dare say this is going to play out over the next several hours. While it sits back above the 36, you can see how important these levels are. 36 was a lot of resistance over these days when we had the crash. Then it came as support as we broke through the retest. You can see here back on the 25th. And again, we've come back down to test this 36K level. The reason 36 is so important is because it is the major 50% level. This is the bear market low in 2018. And then this is our current all-time high. So halfway through that point is 36,000. And you can see the market playing with that number a hell of a lot at the moment. How are you making money from this? Are you just enjoying watching the news, or are you making some cash from it? Let me know in the comments down below what some of the strategies are. 2, if 2020 and 2021 was missed, as I said in the intro, 2022 is going to be the best chance to buy the dips before the cycle continues and the markets pump. Now I'm talking about the financial markets, stock markets, real estate, and potentially crypto as well into 2023. Now I don't know when crypto will end, but I have a good belief on stocks and real estate based on our 18.6 year cycle that we could lead up into 2026. So as I said, if you miss these years, don't miss 2022. Get your plan right, look at what's going on here, and start to accumulate whatever it might be for your portfolio. That's my belief for 2022. Let me know in the comments down below what yours is for this year. As for the $36,000 level for Bitcoin, in a little more detail when we're looking at our Wyckoff analysis, the game between the whales, I don't think they're here to churn out all of the retail. The retail doesn't have the money that the other whales have. They want to churn out each other. They're looking for the big money. So I know a lot of people think there's a manipulation and their whales are out to get the retail, but if you're a whale and you hold 90% of the wealth and retail holds 5 to 10% of the wealth, who do you think they're going to go after? They're going to go after the other whales. They don't give a rat's ass about the 5%. So if you start hearing about the manipulation, makes for good headlines. Just remember where the money is. The money is going to go after the other money. They're not interested in the crumbs. They want the big money. So with that in mind, I see the 36 and the 38s and the lower end of the 33. This is the whales now testing price levels. They're basically trying to play cat and mouse. Who's ready, who's accumulated, where are we going to pump this to take our profits? And that might only be a 10% move up or down. So if we're retail, I believe without being experienced in trading, this is potentially that time where a lot of us can get churned out, lose our bags, lose our minds and our emotions in the markets, and we'll miss out on that big run that potentially is coming in the future. Of course, that's my opinion, my view, and how I'm playing the market. Because at the end of the day, I've got the news, I've got the info, I have to put it into action in order to make some money. Now, the action for the beginners. If you're interested and you like more of this, make sure you smash that like button. I know there's a lot of news out there, but if we can't put it into action, what is the point of listening to it? Okay, so if I was a beginner, I would look for different levels of confirmation. I'll show you that on the chart in just a sec. High, medium, and low levels of confirmation, depending on my experience in the market and how confident I am in my analysis. Otherwise, I'll be buying and holding. Look at the fear and greed plan, which we've talked about many times on the channel. BTC analysis, price level 38, false break above, holding at 36 for now in the short term. This is the risk. High risk is down at these levels. Medium risk is once we've broken through some resistance. You've got the downtrend, you've got the levels that the market failed at, which is around 44.5, and then there was support at 46, 45.5. So if it got above that, that's kind of your medium risk. It could still fail, could still fall a lot from that point. Maybe we do reach these levels because we haven't tested the 50% and we fall back from that point. Now, the lowest risk at this point is around 52K to enter the market above that point. Of course, the returns get lower because you're not buying at 36, but you're waiting for the confirmation to come in around 52. That's what I'll be looking at as a beginner. These levels for Bitcoin, if I didn't have a stack of Bitcoin that I was looking to accumulate. Of course, this can always fall further. That's why one level is high risk, can fall further. There's less chance of it going down further if we make it to this 46. Doesn't mean that it can't do that. And there's even less chance of it falling further if we can break above the 52. So that's how I'd put it into action for my own trading portfolio if I didn't have anything at the moment. So this isn't a buy recommendation. It's just a way to interpret the market, putting in if-then statements for your own plan. I hope that was helpful. If you want to see more of it, you know what to do. Like, subscribe, bell notification icon. Check out the links in the top of the description. I'll see you guys at the next video. Until then, have more fun to get more done.